Ladies and gentlemen, welcome to Renaissance Capital's 25th annual conference on Russia. It's been a really interesting period for all of us. To launch this conference, we're naturally starting with the Central Bank of Russia, an institution which I think everyone's been so impressed by in terms of its growing transparency, its ability to succeed in meeting its inflation targets. And we're delighted to have Alexey Zabotkin, a man who's got 25 years experience on the buy side and the sell side, and has been taking a senior role at the central bank now for some years. I was personally really impressed by how well he has managed the communication to analysts, the sell side and the buy side in recent months, when the Central Bank of Russia has been moving rates and showing its commitment to getting inflation down. What I'd like to do over the 30 minutes we've got for this session is invite you to ask questions. Do put them in. We will try and make sure there's time for those questions at the end of this session. It's only 30 minutes long. I'd like to hand over to Sofya Donets, who's had some great calls on where interest rates were going to go and growth out of Russia. And I'd like Sofya, if you could lead the discussion, please, and raise some of the points that have been coming up in client meetings. That'd be great. Thank you.
Good morning, everyone. I hope you will enjoy our conference. Hello, Alexey. It's so good to see you and welcome you to the speech. And I will start with quite a broad question, but I think it's a $1 million question now for everybody. The thing that we start to discuss during our morning coffee and continue throughout each day, and which is not only in the focus for fixed income, but also equity investors. What's your view on the global inflation trends? How sustainable they're gonna be, or how they will be conditional on the recovery path? What's the difference between developed market and emerging market? And finally, what's the policy response we should expect globally and in the Bank of Russia, from the Bank of Russia? Please share your thoughts.
No. I think this is the question which can be answered only either in a very long monologue or in a very short remark, right? Given that we have only 30 minutes for many questions, I'll defer to the second option. And the short remark is that the inflation is definitely ticking higher, and that's very much the result of the very sharply accommodative policies, both on the fiscal and monetary sides, which were unleashed in response to the COVID crisis. And going forward, it will depend on the path of the recovery, endogenously determined by the already made decisions in the past and the ability of the economy to adjust to the new reality, both on the side of the demand and on the side of the supply side. And clearly the thing which makes the job of the central banks harder than usual is that supply side is much more fluid these days than it's usually assumed in the monetary policy models. So there is a greater margin of error around those judgments for the position of the aggregate supply and its evolution in the future. But I think that at the end of the day, since kind of I'm a very old school orthodox follower of Mr. Milton Friedman, in the long run, the inflation is always the monetary phenomenon. So at the end of the day, the inflation will be that which the central banks in each country permits them to be, right? And assuming that the central banks will live up to their mandates and to those that much greater trust in the monetary policy than it was, say, 10, 20, 30 years ago, both in developed and emerging markets. Kind of, if the central banks live up to their promises, the inflation will be on target everywhere. But to what extent how fast we will converge to that equilibrium will depend on the monetary policy path to a very large extent.
That's great, and in this context, I think that the other very important question is where the neutral rate is. So the central bank continuously reiterated the range of from 5 to 6 in nominal terms for the rate, and I think that what we could see in the curves that the market is pretty much anchored by this estimation. But could it change? Is there any factors behind this that are of some uncertainty for the central bank? And what's about the difference between the short-term and the long-term neutral rate now?
I would like to make a small correction. The central bank's communication for Russia was that the policy rate is the neutral policy rate is judged to be between 1 and 2% in real terms. It's very important to understand that in all macroeconomic models which rely on the notion of the neutral rate, it is a real rate concept. It's not a nominal rate. And yes, 1 to 2% real rate in the long run steady state with inflation at target and the economy at its potential amounts to 5 to 6% in nominal terms if inflation target is 4%, as it is in our case. So, but in the shorter run, of course, there can be deviations, and there are inevitably deviations from the long run equilibrium, and that's exactly what the central bank job is, to assist the economy in reverting to the longer term equilibrium and bringing inflation back to target, or anchoring it at target. If in the short run the inflation and as a result of that inflation expectations are somewhat higher than the target, then probably the area of neutrality for the nominal rate is somewhat higher than the long-term equilibrium. In terms of quantifying it, the frank answer is that there is no central bank in the world which has which is brave enough to believe that it can quantitatively estimate from some fancy econometrics the short-term rate, right? It's what makes the monetary policy a bit of an art, because you have to use your judgment, right? And I would emphasize that again, what is important for the judgment about the nominal neutral rate is not so much the current rate of inflation, it's the expected rate of inflation, right? Because the economic decisions are driven by the expectations about the future.
Yeah, that's pretty clear. Thank you. For us economists, probably this actually means that the key rate in coming months will could be above 6, but still be in the neutral range, given that the central bank expects inflation to stay slightly above 4% for part of the next year. So that's quite important. But if we're talking about the neutral rate this time, I know that the one option to estimate the neutral rate for the central bank was to look at neutral external rates. And what do you think about those neutral rates globally? Is there any hints that they're actually below what we used to think like 5 years ago? Like, for example, for US, what do you think for the neutral rate? Could that affect the central bank decisions, given that it's pretty low?
It is a factor which influences the domestic neutral rate, as long as the capital account is open, because kind of in the perfectly freely floating capital account situation, your domestic key rate, neutral rate shall be kind of in the first approximation equal to the global rate plus whatever risk premium you believe is justified. But that is a shortcut, and it assumes the free flow of the capital both into the economy and out of it, right? If that assumption doesn't hold, then the direct relationship between the two is not necessarily as tight as the ideal theory suggests. But of course, the global neutral rate judgment impacts, even in that case, impacts the judgment about the domestic key rate, neutral rate. And indeed, it was one of the factors which led us to bring down the assessment of the neutral rate from 2 to 3% real to 1 to 2% real last summer. Kind of half of that came from the view of the lesser countries premium, half of that came from the of that revision came from the view that indeed the longer term global neutral rate is turned to be somewhat lower than opined 5 years earlier.
Thanks. And turning to this very risk premium for Russia, what are your views on the sanction risks now, and how much are you worried about? And what could be a potential policy response, if any, in terms of any sanction scenarios?
On that, we have a very boilerplate answer, which won't make anybody fall off their chairs. The baseline scenario on which the monetary policy decisions are based is routinely projecting the current sanctions regime into perpetuity, and we think that this is the balanced approach. In the event of any changes to the regime, the central bank, as it demonstrated on multiple occasions over the past many years, has a very broad range of the financial stability tools which it can deploy as necessary depending on the circumstances.
Thank you. And probably the one question which is probably more precise on the trajectory of the rate and your decisions, if I may, I think it's quite a difference now that unlike previous crises, the central bank set quite an anchor in terms of both neutral rate and inflation expectations, and it actually means that probably the central banks knows exactly what where it's going to end this very rate hiking cycle, and probably it actually will. What exactly stands behind quite a fast increase of the key rate, again, in contrast with previous crises when the central bank preferred to move by very, very small steps. What do you think? Will this work going forward? Will the central bank will stick to its large steps, or will go back to the smaller steps, given some uncertainty?
I would say that there is this formula, I think, used by the Fed maybe 3 years ago. The monetary policy is not on a preset course, right? The trajectory will be determined by the incoming information. And as I said when answering, or alluded to when answering the first question, there is clearly a larger degree of margin of error since this time around. The central banks have to take a more harder assessment of the evolution of the supply side, which usually in the short run is assumed to be fairly static. It's not the case in the current episode, and that is something which impacts the trajectory of inflation quite materially. So coming back to your point, to improve the communication, the Central Bank of Russia added to its published forecast the projected trajectory of the key rate in April forecast deck. It will be updated as usual at the core meeting on 23rd of July. At this point in time, we can only say that, and that's something which the governor said after the June non-core meeting, that at this point in time, both both growth and inflation are probably tracking somewhat higher than the April forecast presumed. Again, the forecast will be revised in its entirety in July, and the April deck, as you know, showed the average level of the key rate for 2022 between 5.3 and 6.3. So there was some slight tilt upwards from the longer term neutral range, which kind of was there to reflect the possibility that to bring inflation expectations down, we may actually need to move indeed beyond 6 under certain scenarios. But it's not predetermined, of course. It will be very much determined on the incoming data.
I'll just interrupt with a broader question for a second. That inflation, and it may turn out to be a much bigger problem in the 2020s, we'll see. But my inclination coming into this crisis was that the next crisis like this one would push us into a more deflationary or disinflationary world. If there is a global disinflation trend in Russia, which affects Russia too in the next 5 years, such that inflation keeps on coming in under your target, do you think the central bank's response would be to favor a reduction in the inflation target, or do you think it would be to accept that the neutral rate could be lower and that central bank nominal rates might be 4% over 5 years instead of 5 or 6%? Which do you think the central bank would be inclined to suggest? To take advantage of global disinflation to cut the inflation target, or take advantage of global disinflation to cut interest rates?
Yeah, Charlie, I remember a very similar exchange exactly a year ago at this event, and at this point in time we had indeed inflation, at least annual inflation at that time running below 4% kind of. Now we have a very different situation, right? And as we all know, all economists know, the degree of achieving the target can be judged only over medium and longer run, right? And because of the lags in the monetary policy, the way how it works. And the fact is, the arithmetic fact is, right, that from 2017 through 2020, the average annual inflation in Russia was 3.8, right? And given that it's slightly higher than that or somewhat higher than that in the first half of this year, probably it converged even closer to 4%. Once you take the window through the middle of this year. So first of all, the notion that the central bank undershot its inflation target since it moved to the inflation target is not confirmed by the data. We are exactly on target, almost exactly on target with that respect. And of course, it's not only it's the result of many circumstances, but I think it's partly the validation that the central bank can achieve the policy target if it follows the disciplined policy, right? So the idea of moving the target because you can't hit it is misplaced. It just means that your monetary policy shall be calibrated better to actually achieve the target in the future.
I would take that as implying interest rate cuts would be more likely then, as if over the next 5 years.
I think I don't think we have enough time for this elaborate debate, but I think the level of the only thing which I can say is that if the central bank properly analyzes the effects of its monetary policy and has the proper view on the transmission mechanism in the economy, it can deliver 4% inflation. Whether it will require, what level of the policy rate it will require, it will depend on a lot of different factors, one of which will be the global interest rate and inflation environment, but only one of those.
Fair enough. Sofya, sorry, back to you.
Oh, well, yeah, more or less back to medium-term expectation and forecasts. My question would be that yesterday in a discussion with a government official, we heard a view that even fiscal stimulus this time around were more of a monetary nature, both globally and in Russia, especially naming the mortgage subsidies and things like that. So what's your view? What's the role of the fiscal stance now? Are they moving to like neutral? Are they neutral already? Are they probably would they add like any problems to the transmission of the monetary policy? And what's your base assumption on the fiscal stance going forward?
I think here are several kind of related but independent questions. First, kind of the fiscal policy strategy was outlined in the autumn, and to our best knowledge, it remains unchanged. That is the convergence of the fiscal policy parameters to those prescribed by the fiscal rule in year 2022, right? So this year is the transition year, and in this transition year, the fiscal policy is not as stimulatory as it was in 2020 when we had to fill the hole created by the COVID lockdowns, but it is still stimulatory compared if you compare it to the longer term steady state, right, which is determined by the fiscal rule. Again, to the best of our knowledge, that strategy remains in place and is very systemically implemented. Among other things, it presumes that, as usual, any additional non-oil revenues which emerge because of the better economic outcome for the year and higher tax proceeds from the non-oil part of the economy, they will be directed towards some supplementary budget spending, and some of those already were pre-announced by the president, right? And the government will implement those in the second half of this year. But as long as the non-oil balance remains the one which is penciled in for this year, kind of it means that the impact on the monetary policy is pretty much unchanged, and we just take the trajectory of the budget into account. But given that the economy is recovering faster and the fiscal policy is modestly stimulatory, that obviously is an extra it's an extra component of the rationale to see that there is no reason for the monetary policy to remain accommodative, and maybe kind of it shall lean towards the upper end of what is the reasonable range of neutral. So that's that's probably the message. In terms of the mortgage subsidies per se, yes, they were extended, and we definitely will take that into account when assessing the aggregate evolution of the monetary conditions. The important message from us is that the significant broadening of credit support programs definitely reduces the efficacy of the monetary policy transmission mechanism. So any large-scale credit support programs are timely and proper as anti-crisis measures, but they should be wound down when the crisis is past to let the monetary policy work for the benefit of the economy in its entirety, A, and B, to actually have those measures kind of reserved in the toolbox to deploy if necessary when the next crisis strikes, because it will inevitably happen later or sooner.
Great, thank you. I would say what my question would be, what will drive the next crisis in your view? But we also have one question from the audience, so I will start with that. The question is how the faster normalization, if happens, on developed markets, presumably in US, could influence the trajectory of the key rate decisions of the central bank? And what could happen if this faster normalization will start when the central bank already will have an elevated rate? So could this be an additional hit from this side? Thanks.
And that's an interesting line of thinking, which is quite popular, as I reckon, from many conversations. In my view, if you think about the kind of core macroeconomic logic of the core macroeconomic forecasting models, right? There are four variables: the output gap, the OI or GDP as another way to represent it, inflation, exchange rate, and the interest rate, right? And two of those are in differences, right? It's the changes in the exchange rate and the changes in the inflation. But two of them are actually in levels, which are the output gap and the interest rate, and or in the differences with the equilibrium, right? So it is answering your question. The thing which determines outcomes is not the change in the interest rate, it's the level in the interest rate, right? And if the level of the interest rate is already at the appropriate level, which is consistent with tighter global monetary stances, then the actual tightening of the global monetary policy will have a rather minimal impact on the future decisions. But again, it will depend on how the things unfold and how significant are changes to the expectations about the global rate path, right?
So thank you. It's quite clear. So I think we'll have no further questions from the audience. So I would take a chance to hear your views on what could drive the next crisis globally or in Russia, and what's your thoughts on potential things the market should focus on now?
I think we have first to actually call the current crisis episode completely closed. It's unfortunately it's probably somewhat premature to say so. We see additional wave of the pandemic unfolding, and as a potential deferral. So I think that let's first get to the steady state, and then we'll think about the next crisis.
Okay, and if not crisis, then what could be like some drivers or focuses? Do we should care about ESG agenda or like boom of retail investors in Russia? What's your other focus?
No, ESG, I wouldn't say ESG is important, but I think from the standpoint of the longer term view, the whole energy transition is of much greater significance, because it will have, it might have quite profound impacts on the parameters of that longer term steady state for individual countries and sectors, and that's something which definitely attracts our attention. Again, it's not something which meaningfully affects the cyclical view on the economy for the next 2-3 years, but that's something which actually is very important when thinking about the 5-10 year macroeconomic sustainability and prudent policies. With that respect, the fiscal rule is totally cornerstone element of the longer term macroeconomic sustainability, and our working assumption is that it will be, or our strong confidence is that it will be in place to actually shield the economy from this energy transition risk. And otherwise, I think in terms of the cyclical outlook, it's the topic which you already touched upon quite extensively. It's indeed the monetary policy response functions of the global central banks. I think plus kind of and its interaction with the supply side, which is by the supply side dynamics, which is kind of again something much where the existing data makes it harder to make an informed judgment than when you're thinking about the demand side, simply because the supply side is much more driven by the expectations than by demand. And in the hard data, you don't see much kind of reasonably good estimates about the business and consumer expectations. With that respect, kind of supply side kind of is something which introduces larger, broader, which widens the confidence bands for all the policymakers.
So thank you. That's a great color and great food for thoughts and a great discussion. So thank you.
Thanks for your questions, and have a very productive conference for the 25th year.
We had a great start, so I pretty much believe that it will go smoothly. So thank you, Alexey. Thank you for your time.
Bye-bye.
Thanks, Alexey.
Knowledge is information, but not all information turns into knowledge. Today, every company leaves digital footprints in hundreds of different sources. But this information by itself does not tell you who it is you're looking at and what the risks of doing business with them are. Businesses can't exist in a vacuum. They need employees, customers, partners, contractors, investors. Good counteragents help a company succeed, create products, make profit, expand business opportunities. But what about bad ones? 49% of organizations around the world say that they've been victims of fraud or economic crime. 2/3 of Russian companies say they've encountered economic crime in the past 2 years. This is significantly higher than the global average. Every year, 15% of companies simply disappear, whether on their own initiative or because they're forced to do so by tax bodies, often leaving unpaid debts. If you want to minimize your risk, you need to find and analyze every scrap of information you can, identifying, analyzing, collecting facts. Processing big data is impossible without qualified specialists, experience, time, expensive equipment, new technology, machine learning, graphs. Spark Interfax gathers information from all available sources and converts it into knowledge, allowing you to see the world of business in its entirety with all its risks and opportunities. And there's no doubt that tomorrow we'll be able to understand the world of business even better, thanks to the emerging digital economy, cutting-edge technology, and the availability of new information about the lives of companies. Knowledge decreases risks and creates trust, the foundation of any successful business.